Hello, my name is Russell Myers. Welcome to Issues Unite. So, the Biden administration has announced that the student loan payment moratorium will end in January. So, student loan payments are restarting again. There are a few things to remember here. Number one, Biden ran on a platform of and made the promise of forgiving student loans. And obviously, that has not happened. There is no indication at all that it is going to happen, not even to any degree. He could at the very least forgive $10,000 to $50,000 of student loans. I've done videos on this subject before, but there's something else to remember. I was reporting back in 2017, 2018, that the amount of student loan defaults have been rising for years. And this is something, if you default on a federal student loan, it follows you for the rest of your life. But the number of defaults on federal student loans has been rising since something like 2014 or 2015. They may have been rising, ever since the 2008 crash to some degree, but it became more noticeable in 2014, 2015. So even if Biden forgives student loans, that means that the federal government is going to turn around and those loans don't just disappear. That means the federal government, issues bonds and turns around and hands the money for those loans to the banks. Now, even I think Goldman Sachs issued a statement about the end of the moratorium, stating that this will slow down the economic recovery. Of course, we're not in a recovery. Yeah, okay, we're better than we were in 2020, but that doesn't mean much, does it? Look at 2020. What does it take for us to be doing better than 2020? There's not a whole lot. That's not a high bar to reach, is it? Now, admittedly, Biden has forgiven a select number of student loans, which amount to, I think, 0.6% of student loans. And the thing is, the student loans that he has forgiven were student loans that Trump was already working on forgiving. So he just continued the Trump policy on student loans. That's all there is to it. But, back to the statement on what this does economically. People the wages are stagnant. They're still stagnant. They're not doing any better than they were in 2019 or 18 or 17, 16, 15. Our wages are stuck exactly where they have been by comparison since at least 2009, at the very least. But really, it goes back further than that. If people are going to have to start paying back on student loans now, the effect that this has is that it's going to reduce the amount of money that they are spending in the general economy. It means that they're going to be buying fewer groceries. They're going to be less likely to buy a new car, new clothes. The chances of them buying a house are already, for most people, are already extremely low, but this just, puts that even more of a stress on their finances, so they're less likely. People are already being evicted from their homes, and now, and if they don't want to get evicted, then they're going to have to pay any back rent that they've got, and this is going to make that more difficult and less likely to happen. So it increases the chances that they're going to be evicted. If they're just barely making their rent right now, and now they're going to have to pay out more money on rent, which has risen considerably, then it makes it more likely that even if they were not previously behind, they will fall behind. People are going to be less likely to afford medication, or go to a doctor because they cannot afford it. They're more likely to stop if they have health insurance. They're more likely to drop their health insurance because they won't be able to afford that and their student loan. And the student loan is more of an immediate threat than the health insurance if they are healthy at this moment. But they could get sick next week, next month, next year, and not have any coverage. When people stop spending money in the general economy at stores and restaurants and so forth and so on, it means that there's less money going into supporting existing jobs, including maybe their own. So if you have decreased retail sales, that means that retailers are more likely to cut hours, to cut benefits, to lay people off. So this is a downward spiral in and of itself. This has a much larger impact, which was not as immediately evident as it was before. Up through early 2020, this was there, but we didn't have anything previous to compare it to. Now we're going to see a dramatic shift for what recovery we've been seeing. All of a sudden, you're going to see the brakes put on that recovery. And you're going to see layoffs. You're going to see reduced wages, reduced hours, reduced benefits. You're going to see all of this happening. So this is a big deal. It's barely getting any coverage from mainstream media, and really I haven't seen a lot being spoken of it on independent progressive media. But this is a big issue that we cannot ignore. Do I have a solution? No, I don't, except for contacting your elected officials, who happen to be on vacation, of course, but write to the White House, write to your elected officials, write to your Congress people. We don't need another moratorium on student loans any more than we needed to extend a moratorium on rent. We need forgiveness of these debts. We need a jubilee. If you look up the origin of that word, which was a forgiveness of debt. That's where the name comes from, that it was a forgiveness of debt. So definitely take the time, write, call, etc., to your elected officials to forgive student debt. Not extend a moratorium, forgive student debt. And no, Biden does not need Manchin's approval to do this. He can do this on his own by an executive order. He can do this. To put the blame on Manchin, they're working together. Don't believe otherwise. Biden and Manchin and Sinema are working together. The Democrats are working with Manchin and Sinema and Biden. They make it clear they are not powerless. They can hold power over the Manchin and Sinema and say, when you run for re-election, you're not going to get our support. You're not going to get any money. You are not going to get any support from the DNC, period, if they actually meant any of this. But they don't. Just like with health care, instead of universal health care, they enact the ACA, which was a corporate welfare program. No matter what happens with student loans, it's going to be welfare for the banks, and it's going to be at your cost and expense. But if they have you paying it out instead of the government paying it directly, what is the effect going to be on the economy, on jobs? Think about all this. All right, so share this video. Talk about these subjects. If you can, please donate $1 a month to help expand the channel, and I will catch you in the next one. Thanks for watching. Bye.